Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, May the 10th. So happy Wednesday, happy hump day, and happy CPI day today. Had a wild day in the market. If you have not seen, of course, we had our CPI. Let me get this out of the way. We had our CPI released this morning right there. And we're chopping into the announcement. This is overnight session, chop, 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 chop. Little flush down here, and then boom, big move up here from that overnight low. That's about 50 points, I believe, something like that. And then from the top to the bottom today is 61 points. And then we almost made it all the way back. Crazy day, straight up, straight down, straight up, straight down. And lots of sharp reversals today. So you get here and everybody's getting all bullish. The light gray is overnight session. The black is where the market opens, the cash session. So we get up here and we're ripping, and then we get a head fake, and we come down here, and then we're literally free falling right here, and then we get a head fake, and we're ripping straight up here, and then we get a head fake, and then we come back down here. Oh, head fake again, head fake, all the way down here. When you take out the low, the overnight low and the low on the day, then you think that, this is not good, and we're going to have, a really bad day, and we just sell here. And then, we're looking at this. I'm looking at charts, and this is ES, and I'm thinking, okay, we're at 4112. Surely, we'll go down to 4100. That makes sense, right? Big levels of support and all that kind of stuff. And we turn, and we never look back, and just go. And then we have one little last flush into the end of the day. So the point of looking at all that, if you are not trading this, probably doesn't matter that much to you. Basically, if you are not trading it, you say, well, the market closed here yesterday and opened up here and closed here, and that's about 18 points. So it doesn't look like much is going on, when under the surface it really is, again, if you're trading this. And unfortunately, or fortunately, depending on which side you're on, this market is pretty good for for day trading if you can get on the right side. There's a lot of money to be made here, but you've got to be super nimble and cautious and all that kind of stuff, right? So let's look at kind of where what we've been doing, what's what we can expect, what's causing all this and all that stuff, and and see if we can make heads or tails out of that. So if we look here, this is a one-day chart on the ES, and then last night's overnight session. If we go back here to a 10-day chart, this again, if you watched the video I did last week, that this is what we've been trading. And again, if you are not trading and you just have some stuff in an IRA that you don't really look at very often, and you would say, oh, 10 days ago we were right here, and now we're right up here. Oh, it's a bullish market. We're just slowly going up. Well, again, that doesn't show you the real picture of the, rip, fall, rip, fall, rip, fall, rip, fall, rip, that kind of stuff. It's going on, every day that we're trying to trade this stuff. And again, it's, I know a lot of people don't trade. If you are trading, you're fully aware of all this stuff that's going on. But we are trading on, we're coming out of this quarter's earnings. We really have a lot of volatility associated with earnings always, in general. But we had Fed meeting last week. We had CPI today. We've got PPI tomorrow. I'm not sure what to make of that. I suspect it probably gives us a little more upside, I think. We'll see. Really hard to tell these days. But, the bigger thing behind the scene right now is we've got the regional bank potential crisis, and that's because of the Fed, many reasons, but a lot of it's because of the Fed raising interest rates and so forth. And so it kind of all keeps coming back to the Fed. And the Fed is, on this last meeting, they are trying to get the target rate to where they want it, and the economy is still a little too hot. But I think we're getting we're either at or very close to the end of rate hikes, most likely. Um, but here's the bigger problem: the market is already pricing in three, not one, not two, but three rate cuts this year in 2023. And I'm scratching my head going, well, this is May. How are we going to get three rate cuts by the end of the year? That just doesn't make sense. But that's what the market is expecting, right? The Fed is basically, we're basically at, hitting their target. But the economy is still, inflation is still too high, the economy is still too hot and all that kind of stuff. So the Fed is, kind of painted into a corner here, whether to continue to hike or not. And I actually think they will not hike more. I think they will pause at the next Fed meeting, which is June, I believe it's 14th, I believe. And then they'll wait and see. We'll just wait and see. I don't see really any logical scenario where they're going to come out and start cutting rates. I don't know where that's coming from. But and the Fed can wait as long as they want to or need to, as this data continues to come in. So if that is the case, and the Fed says, you know what, we're just going to wait, market's going to be disappointed. So which side are we going to be on here? And I don't know. I don't know the answer to it. I am doing a little more hedging, on the downside here. Let me put my voodoo lines up here. Hold on just a second, guys. Let this load. Okay, so this is the ES, and as you can see, this is a 1-year chart on the ES. And as you can see, we've kind of been range bound here, but again, it looks like the smaller time frame charts, this is a 1-year chart. We go up and down and up and down and up and down, up and down, up and down, but we're still kind of in a pretty wide range. This is from 3,500 to 4,200, so pretty wide range. But so from here, do we go higher or lower? And nobody knows. I think we had the best chance of starting a big move higher probably today, but again, we'll see. There is only about a 14% chance that the Fed's going to hike at the next Fed meeting, in June. So we'll see. So between now and then, we just watch and wait. I'm going to put this out, and I'm using the S&P here because that, of course, is the most broad-based representation that we have of the overall market. So if you're trading the NASDAQ, it's going to be a little different. If you're trading the Russell or stocks in those indexes or whatever, it might be slightly different. But but this is the gist of the overall market. Again, that red line there is a voodoo fire line, so that's a pretty critical line here. We're going to go above it or below it, and right now we're just chopping along that line. So what we are doing, and it's been working, in the bias room and in the main room, we're putting kind of range bound trades, not really trying to pick a side too much as far as direction. I am kind of building up some small hedges. If we do go higher, I'll put more hedging out there for the slight chance that there's bigger problems with the debt ceiling agreement and all that kind of stuff. There's just a lot of things moving around behind the scenes right now to give us a lot of uncertainty. But ironically, we're not getting that much reaction from the VIX. The VIX is the fear index, and the VIX is actually, what the VIX close today? It's 1694. That's very, very, very low, which means the overall market is not sensing doom and gloom and all that kind of stuff. So we'll see. I do have charts from Fibonacci standpoint saying that we have the potential up here at least to 4,300. Up here, probably not going to happen without, the Fed starts cutting rates, yes, but that's just not going to happen in the next, I don't think it's going to happen this year, but at least not for the next, couple months or quarter or more, I would say. So expect chop. Maybe we get up here to to down here, or if bad news comes out, we can always go back down here. So I wish I had a better way to define it, but there's no way to do it right now until we get a little more information in about what's going to impact the Fed's decision going forward. So with that, let me wind it up and just say, trade small size, limit your risk. Be careful, just be careful out there. This is a pretty dicey market unless you're actively trading and you're watching charts and you have triggers and stops and all that kind of stuff. So with that, let me wind it up. Hope this helps. If you need help on any of this, come see us at Simpler Trading in the main trading room, or you can come see me in the trading room that I run called Bias. I'm in both those rooms, the main room and the Bias room, but we have a lot of good traders. Happy to help you out. And so let me wind it up here. Thanks for your time. I appreciate it, and I'll see you guys at the next update. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me